Hi, this is Raghee Horner, the Chief Currency Analyst for Interbank FX, and we're going to talk about the Commodity Channel Index, or the CCI as it's more commonly known. This is an indicator that I've been using for many years, and I'm going to show you not only the settings that I use, how I use it, and my entry that uses this particular indicator as a filter. So let's get to it. The Commodity Channel Index, the way that I use it, is used to filter in or out trend reversals. So for those of you that are already familiar with my wave and what you see here on this chart, it might look a little busy to the untrained eye, but for those of you that are already familiar with my 34 EMA wave, you'll see that running across the chart in the green, blue, and red. I've got a 20 period simple moving average, a 50 period simple moving average, and a 200 period simple moving average on this chart. The CCI, which you can activate by going to the Insert drop-down menu, Indicators, and then the Trend menu. Here we have the CCI parameters. I use a 20 period setting, which is actually set on one of the more classic lunar cycle type settings, a 20 period. So on a daily chart that would be 20 days, and on a 15-minute chart like we are right here, that would be 20 15-minute candles. I use the same 20 period setting regardless of the time frame that I am using. So let's go ahead and activate that on this chart. So the way that I use the CCI, and this is again a 20 period CCI, is to wait for a trend reversal. So let's go back in time here just a little bit to where we had a period of time where the market was trending lower. And this is a fairly recent example where we have the price action moving lower in an intraday downtrend. When that downtrend ended, and you can see this by the way on the 30-minute time frame as well, and I do want to emphasize that this isn't simply a short-term indicator. This just happens to be a great example of how the wave reversal works and how the CCI is a very important part of that setup. So notice the downward angle, and the price action continued to stall and reverse and head back down lower for about two, this would be swing trades. The third swing trade did not follow down lower. In fact, the bullish momentum took hold of this market and rallied it up. This is where I'm going to activate my CCI and wait for it to be a filter for this reversal. Let's zoom in just a little bit. So notice that prices were able to break up higher through the 34 period EMA high, the 50 period simple, as well as the previous resistance that was waiting at the 3080 minor psychological level, or if you wanted to wait for the major psychological level at 3100 to break, that was taken out as well. So this area was one of acceleration as we took out multiple resistance levels. This was a cluster really of different resistance levels, from moving average based to my wave to major and minor psychological levels, even to recent highs being taken out. So multiple levels for there to be bullish acceleration as prices were able to take out the selling pressure at this previous level. Now, as we're heading up higher, my concern is really for the acceleration, not just particular prices being taken out, but whether there will be follow through higher through those previous resistance levels and that cluster resistance that we just talked about. Again, moving averages and minor and major psychological levels. The CCI acts as that filter. So when prices break through the 34 period EMA high and my CCI reading is above the 100 level, so at least positive 100 or greater, that triggers a wave reversal. So the CCI in essence becomes a confirmation of the momentum that I am looking to capitalize on as an intraday downtrend is reversing. So that's how I use the CCI. Those are the settings that I use, and that is an example of how you can put this indicator to work for you, specifically in the example of a trend reversal.